afternoon, everybody. Welcome to TraderMerlin Show for your Monday edition. Kind of an interesting day out there, particularly with some of the major news, which is where I'm going to start today's discussion. And yes, I hope everybody stays safe out there in that Tampa area. I know we got some people here that are from Florida, and man, that East Coast is getting pummeled. You know, you guys complain about us Californians out here. I don't see too many issues going on, other than our politics, you know, leave that, but the weather, a little bit better. Although I will say I went to the Huntington Beach Air Show this weekend, which I love it. I think it's one of the coolest things on the planet to go see all weekend long. Nothing but incredibly dense marine layer. Couldn't see any airplanes. There was 1 minute where like a 3-minute window where we actually got to see a couple of the, I think it was F-34 Lightning or 35 Raptor or something like that. Amazing planes. So, yeah, unfortunately, our weather was just a bad. Can't see the airplanes. Hopefully, Florida weathers this storm because it sounds like it's getting stronger and stronger and stronger. And for my friends that live over there, the word is evacuate. Get out of there as you can. Let's talk about broader markets. So I see here that Daniel is asking, does anyone short the S&P? I had a short trade on today, but got stopped out of it. Nothing long-term for me short, not quite yet. And we'll look at the chart here. Let me bring up the S&P. I've had this box mapped out for a while on the S&P 500. Not a while. It's been a couple weeks we've had it up there. And for me personally, it's just I'm waiting to see what happens, right? I don't want to jump on it saying short yet because we haven't quite closed below this low end of that range, which is 57.33. If we do get below that, Daniel and others, then yes, I will be going directionally short, most likely shorting S&P, going into the futures and shorting it, and maybe even buying puts directional. But the question is, how far down will this thing go? If you notice that current trend, I think we're ready for a little pullback, sure, but how dramatic will it be? If it does bring us down to this, let's say once we break, it brings us down to that trend line. Let me extend this trend line out, by the way, so we can see better. Something like that. If it does go to the trend line, that's not that significant of a drop. It's only 1.07%. I mean, that could happen in one day. We were down 0.83% today. So the real question is, how far will it drop if it breaks out below this yellow box? So I do actually, I'll be honest, I do actually think it is about to break down below those levels. And the reasons being has to do a lot with the clickbait title for today, Amazon downgraded. And it wasn't not exactly clickbait. I was actually hoping I could get my AI platform to redraw these pictures, but with that smile upside down. And unfortunately, I did not have the time today to get to it. My time is becoming much more precious now that Trading Academy is back up and we're running full steam. So my time is majority committed there. But what was it? It was a Wells Fargo analyst downgrading Amazon. And I'll bring up the Amazon chart here so we can see that one. And his argument was that I'm downgrading Amazon because I don't think the cloud storage is going to be enough or cloud services are going to be enough to offset some of the other pull downs on their business model. Now, I'm not a fundamental analyst. I don't look in and go into the numbers at all with regards to where each piece of incremental growth is coming from when they report earnings. I do like to look at it. I do like to kind of take a peek and see, but I'm not the expert in that area by any stretch of the imagination. Now, what's funny is let's talk about what this analyst said. So the analyst had a target for Amazon of 225. So let me just put this number right here. You got 225, and that's what it used to be. That was his target out there. Okay, great. You got this nice lofty target that keeps all the longs nice and happy, and they're like, okay, it's going to go to 225 because this guy said so. I'm going to buy it. Okay, so he downgraded it today. You guys tell me. Don't look it up. I'm just curious. Amazon is currently trading at $180, 180. Type into chat what you think his current forecast. Now he's downgraded from 225. Where is he setting his target at? I love this about analysts. Just go ahead and type in the chat. I'll stall here because I know there's a lag time for many of us, but he gave a specific target price, which I will add onto this chart over here. And then when you guys, I just give you some time to put some guesses in there. It's comical, and this is kind of why I think you should never listen to these clowns because it just creates all kinds of problems. So Kenny says 200. Margaret says 120. No. Kenny, you're closer. What he did is he said 183. And it's like, wait a minute. You lowered your target to higher than it currently is trading. Rod says $21. Rod, that would be a pretty bold move by any analyst to do a 90% decline in price on a security. Yeah, I thought this was funny. So it's at 183. So even if you bought it today at 180, you're still below what this guy's price target is. This, to me, is the classic analyst protecting himself. So what he can do now is if price gets above 183, this analyst will now have on his record what? That the price hit his target. So it makes their sheets look better, their numbers look better. So I thought this was comical. You know, you would think that maybe if he's really going to downgrade it from current prices, then, you know, why not go to 150, 120, something lower than current valuations? But these are analysts who are getting paid monstrous 5-figure salaries to make these calls. It's just absolutely ridiculous to me that this guy says his target is 183. Cracks me up. Anyway, what does this mean? Well, certainly there's more and more competition in this space of cloud storage. I think that once we get more AI stuff going, I think you're going to see even bigger data centers put in. But Amazon still has a pretty big lion's share of the marketplace, and I don't see it being that dramatic that it's going to, rip their share price down. If anything, you look at economies of scale and all the services that Amazon bundles into their business models, I think it actually would draw in more business. Well, we'll get there. I do have the list of quotes that are big, but I haven't updated them. So I don't look at this as a really negative piece. You saw today it dropped at 3%. So it actually dropped 3% on the day. Going forward, what does this mean? Well, for me, I always look at a big downgrade from a major firm like this as a buying opportunity. Now, I did not sell any puts today. I'll look at it tomorrow, and maybe if I find enough premium for the remainder of this week, or maybe even up until the 18th, which is going to be next week's expiration, maybe I'll look at that 175 mark. The premium might be pretty good, and I think I'd be okay owning Amazon long term at 175 right now. Yeah, Oliver says buy the dip. I am definitely in that camp of buying the dip out there on this one. Again, this is a company that at no point in the history of my trading career have I ever said anything negative about Amazon. I think Amazon is a fantastic company. I love Amazon. I think it's changed consumption patterns for all of us. I don't know if you guys are as addicted to Amazon as I am, but I just bought a whole bunch of new Halloween decorations. I bought some costume pieces, which I cannot show you. Actually, I will wear my Halloween costume on Halloween. I just won't stand up. Ha-ha! Now you guys will be trying to figure out what on earth I am going to be for Halloween. Aha! It's a perfect costume for this show. So I'm excited about this one for the 31st. As you know, I will always wear a costume on this show. Yeah, Les, you're at Cape Canaveral. I'm sure you are gonna have some pretty rough weather over there too. But you're on the Atlantic coast, not the Pacific, on the Gulf Coast, which right now is the one going to get slammed. But hope you're doing well, and your friends are doing well out there as well. Based on your past comments, you better be earning 5% back on your Amazon purchase. I do with my credit cards. Merlin, going to be a candle? I'm not sure, and I know what you mean by that one, Lisa. Going to be a candle. So I'll let you know tomorrow. I'm thinking the 175s might be where I'm looking at selling some puts tomorrow on Amazon. I'd like for there to be a market sell-off. Now, what does this do first off for the overall market? It does spread around a little bit of uncertainty, because as soon as you see a big name like Amazon get downgraded, it does create a little bit of tension amongst the retail investors. And a lot of investors may actually be thinking about locking in some profit, which, hey, if you got profit on it, lock it in. I think that's a good thing to do. So, I'd be a candlestick. Got it, Lisa. No, I'm not going to be a candlestick. No, I won't be a candlestick, that's for sure. You guys are going to have to do a little bit of figuring out what I am when you see me, but I'm pretty sure I'll see some laughter in the chat once you guys actually figure it out. So, I guess the question for you and I is, what does this mean for the FANG stock? And not FANG, but the Magnificent Seven, because Amazon obviously downgrading, people feeling there's some issues going on with cloud computing, competition, and not necessarily keeping their business propped up like it has been. But we also have some other issues out there, and that brings us to Google. And notice it does have an extra O in there. That was actually an error by the AI. And I thought it was great because it's more like, ooh, like Google, like there's a problem going on with Google. And this is another one that has been an issue. So there was a lawsuit years ago that got settled, and Epic Games sued Google or Alphabet because they were not allowing competitors to Google into their store. And so a judge has said that Google must, or Alphabet must, open their store and change the way their store is structured to allow competition in. And this is a question I received this morning after this news came out, is does this mean that you're shorting Google? No, absolutely not. You look at where Google is at. I'm going to bring up the long-term trend here so you can see kind of what's been happening. At this point, you start to feel a little bit of trepidation about going long Google. And here's the only reason why. We've been in this nice uptrend since 2023, even longer than that. We had this really big pullback, and then we started to move back up. The fact that we stalled right now at the most recent high gives me the feeling that we're going to start to see this sell off again. It's like just a little double top on the way down. So that would lead me to believe that we're actually going to be headed back down on Google. So I think Google long-term is still a great company. I think it has plenty to do. I think that especially with its Waymo cars and its approach to AI and its competition to ChatGPT and OpenAI, I think their business model is great. I do think that this will hurt them a little bit. But when you go to their store, it's the same as Apple. They'll say things like, this is a third-party application. Are you sure you want to download this? And they do this little bit of a scare tactic here. So while there may be some apps that get used that weren't there before that now Google's forced to put into the store, I don't see it the piece that's really crushing their market and going to cause their stock to drop. That said, I got Amazon downgraded. I've got Alphabet with a big pullback here. And my guess is that over the next couple of weeks or days, you're going to see somebody downgrade Google. And not just some podunk, no-name analysts. It could be some bigger firms. Why? I think it's going to be a keep up with the Joneses thing. At this point, big institutions need to start clearing their plate of all these heavy upgrades and heavy long-term calls they have on these tech stocks. So it's a way for these institutions to do a couple different things. Capitalize on the most recent downtrends. Capitalize on this bearish piece of news, which already has the retail investors scared. Come out and issue a downgrade and say your target is, at current price, 164. And then you end up buying back at like 150 or something. Buy back in once the retail sellers come in and push this thing down. But, we talked about the Magnificent Seven. Let me run through some more of those Magnificent Seven just to see what these charts look like. Obviously, we talked about Tesla, which had a beautiful double top a week ago. Right? Nice double top, sold off. Good news for Tesla owners is you're making higher lows. Yeah, we topped out for the third, fourth, fifth time at this, 265 level right in that area. But it's making higher lows all the time. That's really positive. And by the way, in a couple of days, we do have the Tesla Robotaxi conference, which I think is going to light a big fire underneath Tesla. So be careful, anybody who's shorting Tesla here. I think that Tesla could be poised for a bigger rally, a pop to the upside here based off the Robotaxi event. I think it's going to be one of the most watched press conference media events of the year will be, what is this Robotaxi? What does it mean? What are the vehicles? Is there a new vehicle? I've heard rumors about there being a new Robotaxi model specifically for this. So there's a lot of speculation. But in my mind, if you're the first to market with the Robotaxi, you've got another $1 trillion to your market cap. If you're the first to market and actually get it out there fully implemented. Yes, Waymo has them in different cities, and Waymo's owned by Google, so they have a nice advantage there. But Google's got the research. Tesla has the research. Tesla has the AI. Tesla has the infrastructure, the vehicles, the charging stations. So I don't know. I get pretty excited about this one. So I'm not bearish on Tesla. Bullish on Tesla. Slightly bearish on Google and Amazon just off the news. What about Apple? Robotaxi sounds like the latest Android movie. Or Arnold movie. It might be. So if you look at Apple, Apple's a little bit unique in this case because it's kind of been traversing sideways longer than some of the others. You're making kind of lower highs and higher lows, so a little bit of compression here. You guys know I can't trade Apple either way. All right, either way, I can't touch it, but technically, to me, this is a do-nothing pattern. I guess we could draw lines across the lows here, and I'm going to go from points of contact. Yeah, well, that's a tough one. That's not really the best-looking trend line, I'll tell you that. Not exactly where I would want it to be, but you can kind of get the general idea of what's going on with price here on Apple, which is kind of consolidation. So not too concerned with Apple. Again, the announcement is that they're going to release the Apple Intelligence on October 28th, and I think that'll be a nice big psychological boost for their stock and have everybody talking about it again. Now, Meta, been one of the best ones out there, continuing to surge. Now, Meta's been doing more and more. I talked about the Meta AI, and then their video application, which I think is absolutely phenomenal. And you have the integration into Ray-Bans and a lot of other real positive pieces. You know, the trend is your friend till the bend at the end. In this case, I can't see going against the grain here with Meta. So Meta really now has become the leader here. We'll look at NVIDIA and Microsoft in a second, but Meta really pushing higher and higher as most of these other ones are kind of stalling. Now here's Microsoft. Microsoft all of a sudden has really not done much. It's been this monster gainer for the past few years. So, right, since 2023, Microsoft's been incredible. Now all of a sudden, it almost looks like you're forming a gigantic head and shoulders pattern. You know, while I do like what's happened since the beginning of August, which is higher highs and higher lows, this recent sell-off is concerning. If we break below, let me put a line on here for you that want to follow this and track it. If we get below that $400 mark, then I think you're going straight to 485, and if that gets broken, then all of a sudden you're finding yourself down at the 365 mark. So this is a pretty interesting last couple weeks here for Microsoft. This does not look good since it's one of the biggest companies in the world, and it's one of the major weighted components of the S&P and of the NASDAQ. So that's not good. And then NVIDIA. NVIDIA, on the other hand, it looks similar to Amazon or Apple in the fact that it's making kind of lower highs, but it really feels like in the short term, since August 1st, you're forming an ascending triangle. I know some of you love ascending triangles. There you have it. I'll put a line across the bottom here to check out that one as well. Bada boom, bada bingy, somewhere right around there. That's a very positive sign. So we've got, out of these magnificent 7, I've got quite a few things that are concerning. Number one, I think tech is just way overvalued personally. But NVIDIA is looking really strong. Meta looks very strong. So you got two big leaders with NVIDIA and Meta. On the downside, you've got recent downgrades from Alphabet. You've got recent downgrades from Amazon. You've got legal issues with Alphabet, which is forcing them to open their stores to competition. So now you've got two fairly negative pieces. The other three in the middle are kind of meh, nothing really that exciting other than maybe potentially Tesla with that breakout pattern on Robotaxi Day. So something to keep an eye on here price-wise is just these FANG stocks. Again, I'd be bullish from a chart pattern perspective on NVIDIA. I'd be bullish from a chart trend perspective on Meta, although I do think it's ready for a pullback. And then Tesla also bullish on for a breakout above that 265 mark. Amazon, slightly bearish just because I think you're going to get some sympathy selling here. Alphabet as well. And then you had Microsoft, which has been looking pretty bad lately. So here we go. I did a quick rundown on all of those. Let's see. You guys had a whole bunch in here. I will be a Shiba Inu coin. You mean I'm a big steaming pile of dog do? That's what a Shiba Inu coin is. Let's see. Does this have anything to do with Elon being at DJ? No. You mean my costume? No. The costume, no. Does the price chart have something to do with it? Sure. Look. You know, I'm a big fan of Elon Musk. What I don't like when people completely polarize themselves politically and alienate and don't listen to anything else, and they get this mindset that one person is evil and the other person is a deity. I think that that's a fallacy that people make oftentimes, which is why it's important to listen to both sides of the argument and realize that both sides usually have some good arguments. But most people look at one side and go, oh, I hate that person's terrible. And that's what Elon Musk has done. Which is kind of disappointing, but hey, whatever. You're the richest man in the world. Do whatever the heck you want, I guess. You got to ask yourself, well, why is he aligning himself with Trump? Number one, he'll always talk about it's for democracy, it's for freedom, it's for freedom of speech, etc. But, from a business perspective, I'm pretty sure that Trump will be much more, how would I say, accommodating to initiatives that Elon Musk is proposing and Starlink and flights to Mars and government funding and subsidies and things like that will probably continue more if Trump is elected president. And I think Elon Musk is using that as well. So yes, I think that the Tesla chart might be reflecting that. We talk about DJT acting as a proxy for Donald Trump. So let's go DJT, which had a great day today and actually the last couple of weeks has been really nice, although I still wouldn't touch this stock. Why buy something when you realize that not a lot of people use it? Now, you do have an inverted head and shoulders here. As everybody can see that, let me draw it on here real quick. I'm not saying that this is a tradable event, but let me change this just a hair. I'm going to move this up to about there. Let me a little higher. All right, so maybe we can make this better by doing it in the trend line way, which is going to make it look the way it should look, in my opinion. So there we have, oh, sorry, I got snap mode on, trying to do this stuff live. Here we go. What is going on here? Escape, delete. Okay. This is just driving me crazy. What is happening? It won't let me draw this line. Okay, forget it. Never mind. There's your inverted head and shoulders. If you draw it from the neckline to there, you're looking at a breakout trade on this, which feels like it's already happened, which could take us up to somewhere around 25.70 on DJT. Now, we've talked about this. Does this reflect the possibility of President Trump winning as a forecasting tool? And I think that is a very realistic possibility, because if that does happen, then of course what will happen is Trump will go and promote his DJT more and Truth Social on how you need to get updates from the president there, and you'll get a lot more people using that service. So that could be one piece. And Tesla, I think, could be a big benefactor from a Trump victory as president. Now, we'll talk about this again when we have Larry Jacobson on the program. I haven't set a date for that one, but we're going to do a compare and contrast between Kamala and Trump. And again, it's not about who you like or who you hate. That's irrelevant. I don't want to hear it in the chat. It's more about what do these people say they're going to do for our markets, for our economy, from infrastructure to spending to natural resources, and where does that benefit our portfolios, period. That's all I want to talk about. This election is the most I've seen Elon very animated in the selection. Yeah, Oliver, it feels like he's actually been quiet in the past, and it's more about business and, hey, vote for you who you want to vote. Now he is extremely polarized. Maybe his own social media platforms have polarized him with media and news. But yeah, he is definitely extremely vocal. I've never seen him that vocal. And, right now he's becoming one of the most vocal people in Trump's campaign. I mean, if you follow his Twitter feed, it's like every other day is like Trump must win. We lose all democracy if Trump doesn't win, which that's a debate for another day, which I don't want to get into here. Please have respect for the Shiba Inu come out. It's a lonely dog. It is a lonely dog, but he's a very wealthy dog. What can you see with the lack of volume in the market? That goes back to, I think I had one more picture here. I would say it goes back to this, which is, traders just kind of not really knowing where it's going to go. And I'm in that boat. I can obviously do short-term trades, which is what I've been doing lately with mixed success. I've had a couple really nice winners, but a lot of small little losses because the markets are jiggy, right? The markets are whipping back and forth on an intraday basis. If you look at the grand scheme of things from a trend perspective, it's difficult. It's kind of, look at the last couple weeks. These have not been clear directional markets. No real big trend going. So if you're buying breakouts or pullbacks, there's none of that has happened over the past 2 weeks on a daily time frame. So you have to look at this from different perspectives and try to do something that might be out of your comfort zone if you are not a short-term trader, right? Obviously, for the past few months, it's been just buy and hold that rally. And now we're in this hesitation mode where your portfolios have gone nowhere if you're a buy and hold investor. You're just kind of sitting there going, okay, well, where are we going? Where are we going? And I think that the volume is low because of that. It's reflecting a lot of people with hands in their head like this, just going, oh, man, where is this going? What are we doing? I don't know. So I think that that's one of the main reasons that we have this lower volume, lack of direction. You get some positive news from the Fed, you get some bad news from the economy, then you get bad news from the Fed, and you get good news from the economy. It's like I want clear, definitive direction, and I think we'll get this all the way through for the next 30 days at least till we get past that election day. So that's my take on that one. So we've gone through the Magnificent Seven. We've talked about Alphabet's issues. We talked about Amazon's problems, which may not be that big of a problem, but it also is positioning, in my opinion, by the analysts out there to put themselves in a better position to look good on their report card of having made good calls. So the downgrade on Amazon, bring it down to 183 from 225. Okay, fine. So now what will happen is Amazon will start to rally up and it'll break 183, and in a few months this guy will issue an upgrade once it's peaked. All right. Typically downgrades are issued after something is already sold off quite a bit. And you look at that Amazon chart. Here's your Amazon chart. Its peak here was, I'm kind of hidden, but it was actual peak price on this one was $201, and here we are, 10% off the all-time highs for Amazon, and now the guy decides to downgrade it. He downgraded after it fell all the way down to $151. So, just making himself look a little bit better. All right, let me run through some of these questions here real quick. Did you hear the 2 Harvard students that refigured the Meta glasses to get information on anybody on the street, knowing their name, address, phone number, previous activities? I didn't see that, Oliver, but that is crazy. It would seem logical, right? If you can do facial recognition, you can just look at someone and be like, I think you have to say, hey, Meta. You have to say, hey, Meta, look at this. And I think that's the trigger word. Hey, Meta, look at this person and tell me what their name is. And you can do that. Yes, it's kind of frightening. I actually wanted to get a pair because I think they look normal. I'm just curious what we could do with it, but I'll maybe save that one for a rainy day and do it a little bit down the road. But I'd like to see if anybody buys those, what they think of it, how they use them, like what's your real world use case. One of the cool things I saw in the ads and the promos for it is someone's traveling and looks at a sign and says, "Hey Meta, look at this sign and tell me what it says." And it was a translator on demand. That would be, man, imagine if I'm traveling through Southeast Asia, my Thai is a little bit Sawadee Kap, Kap Kung Kap. That's like the basics of my Thai. But I could be looking at signs and saying, what's that say? What's that say? What's that? And I have a much better idea of what's going on around me, specifically in countries where I don't have any knowledge of the language. I think that'd be great for it. But yeah, I'll let you know. It's something that I'd be very interested in. Is it let's see. Welcome, Lori. Good to see you. Do Interactive Brokers has a wager program on the election? I did not see that. Or it might be DraftKings. Probably DraftKings. I don't think that Interactive Brokers want to open themselves up to wagering issues with regulators, so DraftKings is probably the one doing that. But, that happens every year, Oliver. There's always been hey, Big Ab, we need to figure out when I can catch up with you and buy you that beer. I want to do it before the end of the year. It's going to get too far away. So let's figure out sometime. If you're ever headed up this way, let me know. If not, I'll find some way to come down there and plan something out of it so I can grab you a beer. Maybe 2. So yeah, Oliver, that's been going on forever. And there's also a Fed Funds futures, or the CME actually has futures on who's going to win the election. They used to have. I'm not sure if they still do, but for me, nothing new there. It's all just people speculating and excuse me, something stuck in my throat here today. JG says Google Translate already has this with camera recognition. Yep. Right, but you'd have to have a camera with you. This is in those Ray-Ban glasses built in, so your camera's always with you. That is pretty cool. Pretty cool. Instant profile of a person's character as well. That'd be really interesting. All right, Lisa, what'd you say? I said the exact same thing about Meta glasses translating their language last night. Yep. Oh, yeah, Don. I was in there for the last couple seconds of the Don Franz show last night. Always fun. All right, so let me go into, I know I saw somebody comment earlier about my Rivian. What were you getting on my case about Rivian? It's okay. And Margaret, I didn't see Netflix get downgraded today. I must have missed that one. Was it downgraded by Jim Cramer now that it's past the target that he wanted? I didn't see it get downgraded, but 2.47% slide for Netflix today. Not the best in the world. What was the Rivian comment I saw in here? Well, 1 second. No, it's caution will be a stock chart of Rivian. No, it won't be a stock chart of Rivian. I did sell calls again, covered calls against the last 4,000 shares I got, so I have covered calls at 11.50, expiring on the 18th. So totally fine with that. Wouldn't surprise me if we start to see it creep back up towards that level. But if it, since I collected such a large bulk of premium selling the 11.50 puts, and now I have the 11.50 calls against it, which also gave me okay premium. wasn't that much. Certainly not as much as the put premium. If I even get it back to 11.50, I'll still have a fantastic rate of return on that trade. Ideally, it gets up to 11.49 by next Friday. And then I'll sell the 12s, the 12.50s, and continue to hopefully let that thing run up and staggered, and also get some more premium on my position. So no, I will not be a Rivian stock. You skipped my Bitcoin question above. All right, Lisa. Did I skip your Bitcoin question? You just repeat it, because otherwise I'm going to spend all this time scrolling. I didn't see a Bitcoin question in from above, so just type it in the chat again, and I'll get to it. Because I do want to go through these top 7. One of the other things that I think is interesting, and Big Eb just left. I made a wager with Big Eb, and of course we never really solidified what the rules were, and the wager was that the 10-year bond yield would be below 4%, and we didn't specify We said by the end of the year. So I just, okay, fine. At any point, if it's lower, then you win. So Big Eb won. Now, it's going to be interesting here because if the wager had been, it has to close at year end below 4%, now I may win that bet. You notice that's happened here the past couple weeks, particularly the last 3 days, is a giant jump up in yields. You're talking 25 basis points in 3 days on that 10-year. That's a pretty significant pop. And, for me, it kind of breaks this downtrend that we've been in. Now, I understand a lot of you will look at the bigger chart here and say, hey, well, wait a minute, Merlin. That top trend line, it still hasn't broken that. Correct. But what it has done is it has broken the most recent pivot highs. That's important, particularly this level here at 3.92. That was an aggressive sell-off. We came knifing through that. Now we're above that 4% mark. My assumption will be that it's going to trend for a little bit longer, have a correction back to 4%, and then continue to drift up. Why? Well, several different reasons. Number one is that we're seeing the possibility for more rate cuts diminish each day. Now, there's still going to be probably 2 by the end of the year, maybe 3. I think it should be 2. But if those start to get taken off the table because everything's fine, there's no need to stimulate the markets, then that long end of the yield curve should start to rise. The other part here is that you have so much debt, a lot of that debt is coming due, and they're going to have to issue more bonds to pay this $35 trillion debt. Just the interest payments on it. They're not paying the debt at all. They're paying the interest on the debt, which is like $890 billion or something like that a year just in interest. It's absolutely incredible. So this is, a piece I think is, for right now, looks like it's going to continue moving to the upside. And what does this do? Well, this really starts to hurt things from the housing perspective. We've seen the yields drop significantly on that 30-year fixed rate mortgage. I'll bring up another chart here in just a second, but on this one, you guys can see, we were back up at that 4.7. We were looking at 7% 30-year fixed rate mortgages. Now, just a few weeks ago, we were down in the low 6s. And I haven't looked at what it's at right now, so let me bring up the 30-year fixed rate mortgage. We'll bring up a chart of that one, and it never gives me the chart that I want. Here we go. So this is the current numbers, and notice what's happened on the short end of the hard red edge of this. This red one represents a 30-year fixed FHA loan, and then the blue is 30-year fixed. They've all surged over the past few months. So this will make it a little bit more difficult for people to qualify for homes, and the home prices haven't come down. So you've got elevated home prices, and all of a sudden yields starting to move back to the upside. That's not a good sign. It's pricing people out of the market. Right now in California, it's showing 7%. Let's go to a great credit score, 6.58 out here in California. We're a $300,000 loan. Yeah, Oliver, we could be back up to 7. And again, that would be one of those pieces that economically starts to constrict the growth of our economy and slow things down quite a bit. So something to keep an eye on for those of you who are looking out. I know some of you have been targeting next year as that's when the market's going to fall apart and crash. If housing prices continue to rise and mortgage rates continue to rise, then I think that would definitely be an argument for it, because you won't have as much buyers pushing these prices up any further, and at some point they'll just back away from the market altogether. People try to sell, and then all of a sudden things start to fall fairly quickly. So this could set up for a bit of a housing crisis down the road. Nothing that equals, I believe, the 2008 housing market crisis, or the financial crisis period. But it certainly could add some downward pressure on these markets. Hey, Future, good to see you. I think Bill mentioned that they had a hard time selling some bonds at the auction, so they had to raise the yield. Correct, right? Not only, it's twofold, right, Margaret? It's you have supply and you have demand. So the supply of these 10 years is increasing significantly because of the increased debt. And if the buyers increase, great. And I think we should see more buyers. Personally, I think we should see more buyers for 10-year. Why? Because if I buy a 10-year, what it's saying is I'm locking in this rate for 10 years. And if the path of consensus is that we're going to see the short-term yield curve get pulled down over the next few quarters, next couple years, that low end, the short end of the yield curve keeps dropping, then people like Big Eb, who just took off, who's been playing the 3-month treasuries, right? He's been buying 3-month treasuries and then sell them, buy more. And just let him just buy more, because you're getting over 5%. But now if that short end of the yield curve yanks down to, let's say, 4 or 3, let's say it gets to 3%, well, shoot, that means I can lock in for 10 years at 4%. I'm going with that. So that might bring in some new buyers for these 10-year bonds, but who knows? It's a supply and demand equation that's kind of out of whack given all that's happened economically over the past few years with interest rates, inflation, and just the massive stimulus we pumped into the market. It's very interesting to see how this one will play out. But yeah, you are seeing them have to sell more, and you're seeing maybe not as many buyers for our debt. At some point, and I think Bill has mentioned this, if I'm someone who internationally has been buying a lot of U.S. government bonds, I'm looking at the chart of U.S. government debt. Let me just type it in here, U.S. government debt chart. Let's bring this one up here real quick just so we can see. This was updated on September 12th. It's July. All right, I guess we'll do this one. It's $35 trillion. And if I'm somebody who's loaning money to the U.S. government, here, let's do 1 year. All right, so there's 1 year. And then let's go 3 years. I mean, this has to scare you if you're somebody who's buying bonds. Remember, buying a bond is you are lending that government money. Well, this is insane. And then really the 5 year is even more incredible. I mean, we've increased $10 trillion. It's got to be concerning to anybody in this room that up until COVID hit, over the history of the United States, all that we've done, wars, battles, industrial revolutions, you name it, we incurred $23.7 trillion worth of debt. All right? Crazy. Well, all of a sudden, in just 4 years, we've gone from 23.7 to 35.3. So in the, 200 plus years, almost 200 plus years of the United States took, 27 trillion, and all of a sudden we've increased, 23 trillion. We've increased about 12 trillion in just 4 years, less than 4 years. That is, to me, remarkable numbers. And, you're selling more and more. At some point, I think all of us, if you were lending money to a friend of yours, so you'll pay me back 5% interest? Cool, great. And you keep lending them money, but you realize that they're buying more and more stuff, and now they got a new Lamborghini, they got a new house, they got a new Ferrari, they got all this stuff, and you're like, wait a minute, where are you getting that money from? And what you realize is they're borrowing from everybody else. In my mind, it's a pyramid scheme, but usually ends badly. And I think that what's going to happen is a lot of foreign countries are going to go, we've got enough U.S. debt. We've got enough of your bonds. We just don't trust. And I think Elon Musk even pointed this out. He said, we're going to go into a default at some point. And I kind of echo that sentiment. I've been thinking it for years. At some point down the road, there's going to have to be a default. It's impossible for us, given our current consumption patterns as a country, to get out of this debt. It's just not going to happen from even streamlining government and saying, okay, we'll get rid of this department, this department, this department. You can slow it down, but I just don't see us getting out from underneath this colossal mountain of debt other than doing a default. So I think that's what Bill was concerned with. I think that's what Elon Musk has been concerned with. And if that happens, you've got to think about, well, what do you own? What should you own if the U.S. government defaults on the U.S. dollars? Crypto. I know you guys are going to hate it, but you look at something like Bitcoin. Bitcoin would not be impacted by that. You can't manually devalue Bitcoin. Government can't come in and say, oh, your Bitcoin's now worth half of what it is. The rest of the world's going, well, we hold Bitcoin, and we don't think that's the case. We're still buying and selling. So you don't have that intervention. But they could easily come and devalue this currency to help pay back our debts with cheaper dollars, which would probably create a lot of enemies along the way. Yep, Oliver, gold. It's 100%, right? Gold is the physical side of it, which they could confiscate from you if they wanted to, right? Bitcoin being digital gold. Where would you keep it? Water. Chris, I like that one. Ammo. Ammo will only get you so far, right? It will only get you so far. But and buying ammo might not be the best investment, but certainly get enough to protect yourself, I think that would be. But yeah, you want to go with commodities, physical commodities, gold, silver, platinum, palladium, these types of metals that have some international standardized value. Obviously, I'm not going to be buying barrels of oil and stocking up on those as a currency, but that could be done as well, something that has actual value. Why does debt ceiling keep being increased every year? Because if we didn't raise that debt ceiling, we'd have a government shutdown, and all of a sudden things would start to get really bad. So they scream and yell at each other. Oh, it's the Democrats' fault. Oh, it's the Republicans' fault. Oh, you suck, you suck. We hate each other. We're not going to agree because you don't want to agree. And okay, we'll raise it. Otherwise, the government will shut down on our watch, and we'll all look like a bunch of bumbling idiots. We can't have that because I want to get reelected. Therefore, we'll raise that debt ceiling. So that's how I view it. I'm jaded. I'm bitter. I'm cynical, as you guys know. So I think that's probably why. Because Congress won't cut the budget. That's certainly one of them. All right. And let's be honest here, guys. For all of us, it's easy to say, cut your spending. Cut your spending. Streamline your business operations. You've got a lot of people there that are probably doing nothing, right? That are just slackers. Get rid of them. Imagine what happens if you got rid of all those people in government jobs that were just slacking, milking it, not doing it really much at all, and they should be removed from their jobs, but they're protected. What happens if you get rid of all those people? Now all of a sudden we've got a much higher rate of unemployment because you're going to lay off thousands of people, and you're also going to have those people that get laid off are going to scream and shout at whichever administration. You could be diehard one party and your president is the same political party. If they all of a sudden make cuts that lay you off and put you out of work, you're going to be like, I hate that party. I hate that person. I hate that candidate. I'm not voting for that person. And you're going to scream bloody murder against that president. So whichever president happens to do that, or Congress, there'll be a huge segment of the population that's going to point at them and go, don't reelect them. They're terrible. So while we all want it, making it happen is to me, mission impossible. Mission impossible. They're going to turn on you and crime will go up. I think so, Oliver. I don't want to go to that Civil War type thing, but does it get to that level of angst and frustration with our government? And I mean, look, it'd be interesting if Elon Musk gets in there and actually does what he says he's going to do, which is really streamline things. I mean, I would welcome it. It could be interesting to see. Uncertainty, Michael. Michael, you always come in like right as I'm wrapping up the show. You missed the good stuff early, my friend. You're probably busy. I get it. Yeah, maybe mainly market uncertainty. Plus, you had some negative news out there for techs with downgrades to several different companies, particularly Amazon being the big one. You had Google's lawsuit, so that's the main reason why we're seeing that weakness out there in today's market. Now, let me run through the last here. We didn't look at them yet, but Nasdaq, even though it's down 1.16, still just traversing sideways. Nothing really interesting going on. You have S&P, same thing, sideways action. Again, I'm waiting for that yellow box to break. If it does, excellent. I'll go either way. I am more biased to the short side right now, but I'm going to wait. Russell, similar thing with regards to gains today, down 0.87%, but technically nothing really here that's that exciting. You actually have what's called a bullish flag formation on the Russell right now. If we hear more talk about rates getting lowered, this could be a big catalyst for the Russell, which I am a believer that will happen down the road. Gold. Unchanged, sideways, nothing really exciting, kind of drifting slightly lower and lower. Dollar index, this has been a real interesting one. We talked about how the dollar was in a beautiful downtrend. It had a little head fake breakdown or a bear trap on the breakdown below that yellow box and then has screamed back to the upside. We have that 103 target as that next logical point for it to slow down and reverse the other way. Your 10-year, we already looked at this one. That's just, man, this is not good. Not good for the markets if this surges much more. Bitcoin had a nice little recovery from some negative moves over the weekend. You're up 1.35% to 63,560. And then continuing its incredible run, and of course coming right back up to the levels we've been talking about, you have crude oil. 77.14. You notice you've got multiple turning points here, 84 being the maximum one, but that would be a pretty tough stretch to get to 84. You also have this downward trend line that a lot of you have been looking at as kind of that target point for this crude oil chart and the bounce back up. The hope is, or not the hope, I hope nothing happens, but right now markets are on heightened alert because of the belief that Israel is going to have a counterstrike against some of the attacks that recently happened. So, that tit-for-tat war that's continuing over there, that will, again, I believe that's going to continue. I don't see a real end in sight. So that should put more upside to crude oil, although we have had a phenomenal run. If you go to just the lows from October 1st to where we are today, oil is up 16%. So fill up your truck while you can. All right. No problem, JB. I got to head out of here myself. Let's see. Where does tax money go? We already pay a lot of tax. Yeah, we pay a ton of taxes. Scott says shut it down or cut the budget or pay for the salary. Time for some accountability for sure. Yeah, Scott, I agree with you. The problem is if you're the one making those cuts, you're going to have people hate you. and you won't get reelected. You won't get voted back in because, you know, you're all of us right now are being tortured with ad campaigns for politicians. I'm sure there's not one person in who's like, oh, I can't wait to see another ad campaign in the middle of my football game. Doesn't matter what party you're on, because one commercial will be pro your party, the other commercial is anti your party. It sucks. If somebody was elected, well, let's just say that it was Biden, right? And just because it's current administration. If Biden was to just start cutting all these jobs that don't need to be there and saying, what do you do? How are you doing it? What's your, effective score? If you're not scoring well and you're not doing much, you're out. Done. And start cutting people. Every ad campaign would be like, he's taking away American jobs. He's making people homeless and unemployed, right? That would be the talk track to any president that made these cuts, and they'll never get reelected. It's terrible. All right, let me go into your calendar for this week. Again, we do have some pretty big announcements happening with CPI and PPI, but that's not going to happen tomorrow. Tomorrow we have a rate statement coming out for New Zealand. That will be after the show. Might be after the show, but that one to me is kind of surprising. They're expecting a 50 basis point cut for the New Zealand dollar. For the U.S., you don't have too much. You got trade balance, a small business index numbers, but that's really nothing exciting. And on earnings front, there's nothing cooking for tomorrow. It all really starts on Friday. Friday is such a big day with regards to earnings. So Laurie says politicians care more about their jobs than doing their job. Unfortunately, there was a guy many years ago. You guys might remember Ross Perot. I know he seemed like a crackpot, but I like this guy because he was like this older guy. He had enough money. He just didn't care. It's like he really wanted to make changes. And I think he would have been the type of person that would have said, we're going to just clean this whole thing up. And you can hate me all you want because I don't care. I'm old. I got all the money I need, so I'm not concerned about that. And, unfortunately, there's always that greed motive. There's always an ulterior motive. Maybe some people go into politics with wide-eyed ambitions, but as soon as that money machine starts showing you how much you can make, I think most of them become corrupted. This war battle is 3,000 years old. Yep, totally. I agree. I was at Buffalo Wild Wings in Irvine, and Kamala Harris ad came on. You can hear, yeah. You're in Huntington Beach, right? HB is, you're in Irvine. Huntington Beach is really pro-Trump. They've got, if you go to the beach, they've got every weekend a huge contingency of flags and stuff screaming Trump. It's kind of funny. All right, anyway, that's going to do it for me, everybody. Will be an interesting day tomorrow. I'm curious. I'm hoping we break down below that level in the S&P so I can get some good shorting opportunities. Other than that, it's going to be a normal, average, everyday day. Hope you guys had some fun today. Let's see what tomorrow brings. If you have something you want me to discuss, email me at TraderMerlin@gmail.com or put it down below any of the YouTube videos. That said, thank you guys so much. I will see you mañana. Take care.